I have the pleasure of welcoming Danske Bank and Carsten Egeriis, the CEO, and Claus Inger Jensen, the Head of Investor Relations, for this meeting where I hope you will get an insight into Danske Bank and the status where they are today. We have only 9 slides, so actually it's up to you to post some questions. The reason we are doing it in English is that Danske Bank is an international company. There's a lot of audience outside Denmark, so we hope to attract a lot of audience also from the outside. But please put your questions in the chat below. You can do them in either English or Danish. I'll of course translate them. So welcome here. The event will be approximately 35 minutes approximately, depending on the number of questions. But welcome. And welcome to you, Carsten. Welcome to you, Claus.
Thank you very much. Good to be here.
Thank you. Let's just perhaps introduce you, Carsten. You've been obviously around for a long time, but perhaps you could give us a brief introduction of yourself.
Yes, sure. I haven't been around for that long time, but I joined Danske Bank as Chief Risk Officer and as a member of the executive leadership team just about 5 years ago. And I took over as CEO in April 2021. So I'm just coming up to 18 months now. I spent pretty much all my career outside of Denmark, although I am Danish, including spending 11 years with Barclays in the United Kingdom, in London. But again, came home to my home country here in Denmark 5 years ago. I'm also the chair of Finance Denmark. Finance Denmark is the banking association in Denmark. As you can see also by my team, just briefly, it is a very new team. I'm actually the longest serving part of the executive leadership team at Danske with my 5 years. So it's a very new team that we've built. It's also a very new board that we have in Danske Bank. And you know, I think it's a great, both diverse executive leadership team and board, and you know, we're fully focused on turning around Danske Bank, and I'm really pleased to be able to speak to you all today and give you some insights on that.
Perfect.
Maybe too, I should start out by just giving a brief snapshot on the next slide of
exactly.
Bank, because maybe many of you will know it's Denmark's biggest bank. It is we think about ourselves as a Nordic universal bank. We serve approximately 3.3 million customers across Norway, Sweden, Denmark, and Finland. We see ourselves as when I talk about universal bank, we see ourselves as a bank that really touches pretty much the whole spectrum of financial services across the piece. So we help customers with their mortgage and their savings. We have a pension company in Denmark, Danica, so we help our customers with pension. We have a mortgage company in Denmark called Realkredit Denmark, so we do mortgage lending. We have a leasing company called Nordea Leasing, so we help on the leasing side. We have an asset management business, so we manufacture and distribute investment products, and then of course we do everything in banking, all the way from the personal customer and all the way up to very large, both corporate and institutional customers. When you think about it, the balance sheet of Danske Bank is about $500 billion. It's about 1.6 times Denmark's GDP. It's a very big bank in the context of Denmark and also in the context of the Nordics, and therefore we also take that role very seriously. We play an important role in society. We play an important role in the whole financial infrastructure, particularly here in Denmark. And above and beyond that, we also employ over 21,000 employees, and roughly half of those employees is in Denmark. So that's a little bit of a snapshot too of Danske Bank.
Very helpful. Thank you. I think if we move on, I mean, obviously there's a lot of things undergoing if you open the papers these days. So maybe you would just share your view on sort of the macro scenario right now. I think that's a good intro to a later discussion.
Yes. And look, of course, being a bank, we are completely integrated into the economy. Everything that happens in the economy impacts our customers at the end of the day. How I would describe it at a high level is I see that there's two very new realities that all of us, that our customers are dealing with. The first reality is the market reality, a market reality with higher inflation, higher energy prices, and of course, interest rates that for the first time in 11, 12 years are now positive and are increasing faster than they've ever increased in newer time. So a new market reality where we all need to get used to what was this whole financial experiment with negative rates and what happens when you go into a positive rate environment. And at the same time, how do we deal with such increasing inflation? The other reality is the geopolitical reality. We have war in Europe. We have a tragic war in Europe. And we also have rising tensions more broadly, for example, in Asia, where there is a increasing tension between the West and China, between the US and China. And all those things obviously also create risks and uncertainties. And of course, the war here in Europe is partly, of course, what has also accentuated and pushed on inflation, such as energy prices, such as raw materials, on various different foods and so forth. And within that financial uncertainty, we as a bank, our most important role is to be there for our clients, to help advise our clients, to help advise on what should we do with savings, what should we do with repurposing or changing our mortgage loan, how should we look at supply chains, how should we think about investing in various different forms of production, how should we energy renovate, and so forth. So that is what we see our role, and it's of course times like this where a bank like ours needs to help absorb the shocks of the macro uncertainty and help our customers.
And Carsten, perhaps that's a good, if I may interrupt you here, because of course interest rates is a two-edged sword. I mean, on the one hand side, it's obviously on the income stream, it will help you definitely, and I think the market had already given you some benefit of that. The other side of that is, increasing perhaps write-downs over time. So how do you actually navigate in this? If you're an investor, how should you perceive this situation for Danske Bank?
Yeah, I think it's a very good question, because as you said, in general, higher interest rates is good for banks, because banks at the end of the day take in deposits and then help lend those deposits out. And then there is some asset liability management, and then hopefully there should be a margin. So don't let bankers tell you that it's complicated. That's basically what we do, right? But at the same time, of course, there's a lot of risk with the credit side, with lending money out, and in times of uncertainty, that is exactly the balance between the income uplifts from higher interest rates, but the concerns on credit quality and what will happen on that front. So some will say that banks are a little bit of a hedge against rising interest rates, because banks benefit from rising interest rates, but at the same time, the question mark, of course, is always back to the risk picture. And here you see for Danske Bank, we have managed risks very carefully throughout and after the financial crisis. There's two main areas that always go wrong when there is a recession. If you were going to sort of point to what is it that always drives increase in losses, it's real estate. And then it's what we call leverage finance. So finance to corporates that are over leveraged, have too much debt. We do not a lot of leverage finance, so I won't focus on that today, but I will focus a little bit on the real estate side. And the real estate side is basically made up of course, the commercial lending. And commercial lending is basically largely split into commercial property and then residential property, e.g., where you let out residential property to all of us who have a house or an apartment. And there I really differentiate the risk, because commercial property is heavily dependent on, for example, companies' office letting or warehousing, where companies warehouse and sell on products. That would be the part of commercial property that's most risky to the changing economy. The residential side, broadly speaking, unless you see a very high increase in unemployment, the residential side we're much more comfortable with. It's also something that you can't really sort of see a lot of, let's say, disruption in, because everybody needs a home to live in. And we've managed our exposures there very carefully. We've increased our actually exposure to residential. We have significantly decreased our exposure to development because development is probably the riskiest part of it. And then the other part is the retail part. And here you see retail customers have extremely high equity in their house. We've come from 10 years now of increasing house prices, and therefore the average loan to value actually of our own portfolio is around 46%, which means there's 54% of free equity. So I believe that we go into this uncertain macro environment with a lot of equity, actually both on the residential and on the commercial side. And we've managed that very carefully. But I'll throw it back to you two as well for questions.
Yeah, I think that, but why don't we just go a little bit into, because the questions will come in now about cost and structure, and I want to push that a little bit further. So maybe we just take a few highlights from H1, and then we can go directly into questions.
Yes, and you could say the first half for us was a tale of two stories, if I can say it that way. The high level numbers were not as good as expected, and the high level numbers were very much driven by the huge volatility in financial markets. So if you see the top right here, and you look at our H1 performance versus our H1 performance in 2022, actually the green boxes show that we had good underlying momentum. So our net interest income went up. That's, by the way, more than half of our income. Fees was pretty stable. That's another 25% of our income. But the 25% roughly of our business, which is Danske and our markets and trading business, probably more like 20%, that was significantly impacted by the financial situation in the second quarter, where interest rates, as I mentioned before, increased significantly. And that causes a bank like ours, which is very big in fixed income, so trading and facilitating trading in fixed income, government bonds and corporate bonds, took a big hit. So we had some what I would call one-offs because of the financial volatility in the second quarter. But if you normalize for what was an extremely extreme event, maybe a 1 in 20, 1 in 30 year event, then the underlying parts of the business are going in the right direction. And I did want to maybe just on the next slide.
Yeah, exactly. You have these green shoots.
Because that would be my message to our shareholders, to our stakeholders, is we have been working hard in Danske Bank over the last 5-6 quarters to really focus on what's most important, which is our customers, and to regain commercial momentum after some very difficult years with various different difficult cases, including debt collections case and the AML case. And today we're in a space where we see strong commercial momentum in large parts of our business. And just to give a few examples, in the first half of the year, we increased our market share in bank lending, in both personal bank lending and in corporate bank lending. We've increased our market share in Sweden corporate lending. Sweden is 50% of the financial services markets in the Nordic. It is a market that we see as a growth market for us. So we're very focused on that. We're also increasing consideration rate in Denmark on the young customers. It's still coming from a low level, but for us, it's a game of progression, and we're seeing that progress. In our large corporate and institutional business, we want to be a leader in sustainability. We say in Danske Bank, we differentiate ourselves on three things. The best, most expert advisory, that's really important in times like this. The best digital solutions and digital solutions that basically facilitate how our customers engage with us, and then sustainability, and both sustainability from a financing and investing perspective, and of course also an advisory perspective. And in large corporate institutions, we are today in the Nordics the #1 issuer of green bonds and the #1 facilitator of sustainability-linked loans.
Yeah.
So those would be a few words on the business progress, and then I'll throw it back to you too.
I think I'll throw in a question here because Tobias Hansen is asking, what kind of actions have you taken to avoid the huge losses that hit your trading income in Q2 2022? Sorry.
Yeah. We have of course looked very hard at our fixed income business, and our fixed income business is really what drove these big losses in the second quarter. And again, that is mainly driven by Sweden and Denmark, where we have between 40 and 50% of the fixed income market, and the focus there has basically been to de-risk and to be very careful on the positions that we take on book to help facilitate business. The business of trading is such that you need to have some positioning to be able to facilitate trading between both institutions and corporates. But in this very difficult environment where it's impossible basically to foresee and manage the correlations between both the hedges that we put on book when we trade and the absolute positions that we have been focused on de-risking and making sure that we're very careful on the positions that we take on book, and therefore the facilitation of trades would maybe have a little bit more of a time lag and would maybe be a little bit more short term, but I think our customers are also very understanding of that given the environment.
Cool. Let's move on, Carsten, because I think that there will be a lot of questions about the structure, the Better Bank plan, and so on. So I mean, this is basically the plan you have set now, 8.5 to 9% ROE in 2023. And let's start off by the question. Handelsbanken have been out selling their business in Denmark, for example. Is there any sort of structural things in terms of where you are that it's on your mind?
Yeah, I mean, I would start off by saying I think we have a different starting point than Handelsbanken. We do run, let's say, universal banking models in each of the Nordic countries with, I would say, more scale than what Handelsbanken, for instance, had. Having said that, there's no question that when you look at our retail businesses in the different Nordic countries, e.g. Norway, Sweden particularly, because in Finland we have about 10% market share, which I think you would start calling scalable. We're a top 3 bank there. But the retail businesses in both Norway and Sweden are subscale today. We see ourselves as a challenger retail player, but we have not grown as fast as we would have liked with the profitability that we would have liked. And therefore you could say structurally, we are challenged in those 2 markets from a retail perspective, and that is of course something we're very well aware of, and that we're fully focused on seeing how we can address that. And at the first point, we address that through making sure that we have profitable partnerships with the partners that we use to distribute mortgages, and then of course to be very focused on increasing the overall share of wallet with our customers in those markets.
Okay, so but let's just spend a bit of time on this, because obviously if you are invested in the Danske Bank stock, you're buying into this sort of plan of a better bank for 23. And I guess there's 2 ways of making this return, and that is first of all on the income, and then there's also on the cost side. So perhaps there's a question here on the chat about your cost structure, and maybe you could just elaborate a little bit on how you see the cost structure developing.
Yeah, there's no question that our cost structure as it is today is not sustainable. We run if you normalize for the big swings in Q2, let's say a cost income ratio of 61, 62%. that is higher and in some cases quite significantly higher than our Nordic peers. And so it is not sustainable, of course, to have so much of a higher cost base. There's three things that we're working on. One is that there is high compliance costs that are associated with our remediation program. And when we normalize those compliance costs, the cost income ratio will come down. And we've said that it'll probably come down by about 800 million between now and 2025 on the financial crime side. Two, we've had extremely high remediation costs focused on the AML case and on the debt collections case. And if you take that out and normalize next year, that's about 1 billion of costs out. And then the third thing is continuing to work on how we digitize and automate our processes. And that will also be taking costs out. And we've already shown, I think, in the last few quarters that we have the ability to take underlying costs out. You also see from the FTE in Danske Bank, we probably were about 22,600-700 at the top. Now we're at about 21,600 or so. We have been able to take out costs through automation and digitization. And these are things like being able to open an account automated on the mobile bank, or being able to buy your products online instead of through a person in the branch, or indeed by reducing the branch network and doing more through the digital channels. So those would be sort of the three components of costs. And we've said that by the end of 2023, as part of this ROE ambition, we need to get to a mid-50s cost to income ratio.
So there is a plan on the cost side, and that's actually one of the things I'm often very exposed to that about Danske Bank is that this that the number of people that works with compliance obviously is a very high number, and I guess it's coming down, and that's the 800 million you're referring to over time. Is that correct?
Yeah, we said for our financial crime part of the cost, which is the largest part of the compliance cost, we have about 2.3 billion costs today, and we said that it would come down to a normalized level of about 1.5 billion by 2025. And you're right, that includes, of course, also that the FTEs come down. And how we do that is, one, because we're fixing some of the legacy issues that we needed to fix, and then also through automation and digitization. For example, through improving our transactional monitoring that you need to do for all the transactions that we do, better models to do that are more efficient, that require less manual work, just to give one example.
Fair. And then let's turn on the income side, because obviously there's a cost side and there's a revenue side. And can you sort of perhaps tell us a little bit about your plans on the income side? I know it's a very broad question, but I think it would be very helpful going into a recession, if that's the case. How are Danske Bank going to navigate through that in terms of the revenue side?
Yeah, so we've said that we would get to a top line revenue of just over 43 billion by the end of 2023. That is not a significant growth, but it is growth that you could say is in line with what we at least at the time saw as the growth in the economy. That growth may be a little bit weaker, but on the other hand, the rates, of course, is a substantial a mitigator for that from a bank perspective. And the growth basically comes across three things. It comes across continuing to grow in our retail and our corporate businesses in Denmark. So continuing to do more with our customers in Denmark, and we have significant opportunity as well to reprice and refocus our segmentation in Denmark, so that we focus our frontline advisory resources more on the more complex customers that really need the advice and that also have appetite to do more with the bank. So that's one area. The other area is to continue to grow our business banking franchise across the Nordics. We believe we have a really good platform that can help facilitate growth and engagement with our corporate customers across the Nordics. And as you also saw before, we do see growth both in Denmark and also in Sweden on the business banking segment, as we call it. And then the third lever of growth is continuing to grow our large corporate and institutions business, where we have a really strong position in many areas in the Nordics. And that both includes on the sustainability side, which I spoke about before, but it also includes more broadly focusing on how we do more with our customers across the daily banking parts of the business, as I would call it.
Okay. Could we then perhaps discuss a little bit about what you refer to as the AML case and those cases? I know you cannot, of course, tell us anything breaking news here, but my idea actually was to sort of maybe ask you to just restate what you've actually said about these things. So that and the reason for my question is that I actually think that this is sort of something that weighs on the Danske Bank share. That's a personal opinion, that once this is over, I mean, then we can start navigating again about your sort of capital situation.
Yeah, no, but you're absolutely right. I mean, we've had sort of two big cases that have been weighing down and where we spent a lot of resource. One is the debt collections case, and we now have a solution to the debt collections case. It's cost a lot of money, a lot of resources. We now have a solution. We went out with that a few weeks ago, and we're fully focused now on making sure that we operationally compensate the customers that need compensation, and then we can put that to rest, so to speak. And then the other big case is of course the Estonia case, and we of course hope that we can get that solved as quickly as possible. As we've said, we hope that we can get to a resolution this year, but it's not in our control. We've said to the market, of course, that we have initiated a dialogue with the U.S. and Danish authorities on it, and of course the case has been underway now for a little bit over 4 years, and we hope that we're moving towards the end of that. But I cannot say anything else at this stage other than I very much agree that will be a very important case for us to get resolved.
Definitely. And I think that my next question, and I also think there will be a lot of questions about this, is your dividend and the link between the case and the dividend. Because if I'm not mistaken, the way you sort of wrote it in your statement is that because of the case, you will not pay out the remaining 5.5 kroner for the year. But does that also mean that when this is solved, you will get back to the more normal pattern of paying perhaps my estimate 8 kroner per share, 23, 24? Is that sort of the game plan?
Yeah, I mean, again, notwithstanding the case, and you're absolutely right. I mean, what we said was that to ensure that we manage capital in a prudent manner, we would not pay out a dividend while these discussions were ongoing. But our dividend policy absolutely remains the same. So to pay 40 to 60% of profit after tax in dividends, which I think would equate to a range around also the number you said.
Yeah. So and just to be more precise on this, we will not get any dividends in Danske Bank before the case is solved. Is that how you have phrased it?
Yeah, we have not phrased it so resolute, so black and white as what you said. We've said that we will continue to manage our dividend carefully, and that the board would look at this on a quarterly basis in this time. And of course, this is a decision that is up to the board, of course.
Definitely. And there's a question about share buybacks and potential share buybacks. Can you comment on that?
No, I mean, my only comment to it would be that is absolutely a capital distribution tool that we've used in the past, and that we would look at again in the future once we have more clarity on our capital position. So I wouldn't say we will do it, and I absolutely wouldn't say we wouldn't do it either. It's something that we have done before and that we would consider in the future as well.
That's cool. Let me just double check if there's more questions, then I'll ask them. I think, Carsten, to be honest, a lot of the questions is about credit quality, is about Realkredit Denmark and the potential losses there. And the reason I'm not so worried about this is that we've been through a crisis before, and as I remember, it's never been a real problem for Danske Bank to have big private write-downs. Isn't that correct or a fair assumption?
Yeah, I mean that's correct, and I mean you saw the average LTV. I think there was also a question I just saw in the corner of my eye around, how much of the book is at the higher LTV band, and really that is a very low amount, because you basically seen house prices, go up by 10-20% in the last couple of years. So anybody who's bought in the last couple of years will already be sort of, at 80% LTV or what have you. So it is really an extremely small part of the portfolio, which is at an LTV above 90%.
Yeah, I hope that was an answer to that question. It becomes a bit technical, but that's the way it is. And then perhaps a final question here. The way the market values Danske Bank obviously is price to book is very low compared to other banks. I'm assuming that you are not happy with that. So how do you see a road to sort of get that valuation up? I'm not asking you to comment on your share price, but it must be something that's on your mind constantly, of course.
Well, I mean, first of all, you're right. We're not at all happy with the price to book. I think there's a couple of things in this. One is to get resolution on the Estonia case. There's no question in our mind that is weighing heavily on the stock price because of the tail risk concern, and because it limits new investors, so to speak, also. And then the other part is to continue to deliver on this plan. And as we deliver on this plan and sort out the remediation and continue the trajectory that I mentioned before on the green shoots, then I'm convinced that the stock price will re-rate and the price to book will re-rate, so to speak.
Cool. Carsten, I don't think there's more questions. I think we kept it within time, 30 minutes approximately, and I think it was very valuable to go through, and there's been a lot of good questions. It basically shows that what the market is concerned about in Danske Bank in the stock price. So I thank you very much for both you and Claus for joining up. And I hope you have had some fun seeing these interviews. And if you have any questions or anything, please write to me or Rasmus, and then we'll take it from there. Thank you very much.
Really appreciate the opportunity. Thanks everybody for taking an interest in Danske Bank. Much appreciated.
Thank you.